You're listening to the Savings Tip Jar with Dom Beattie and Brooke Cooper, brought to you by Savings.com.au and your mortgage. G'day, great to have your company for another episode of the Savings Tip Jar, talking all things savvy for Aussie savers. And it is crunch time for savers at the moment, with fuel prices soaring, interest rates rising, inflation out of control, while property prices and rents are still too damn high for too many of us. Our listenership really should be going through the roof at the moment, given everything that's going on. So we'll try our best to deliver the savings news, expert views, chats, and tips that you need to get you through this tough time. But first, allow me to introduce my co-host, Brooke Cooper, who's in the jar for the final time, unfortunately. G'day, Brooke. Great to have you back for this week's episode, even if it is your last one ever.
Hey, Dom. Yes, it's so bittersweet. I'm so happy to be here, but also so sad that this will be the last time I'm on the pod before I move on to different pastures. And nice to...
Like you said, different pastures, not greener pastures. That's better.
Can't be greener savings.
Yes, onwards and upwards.
Onwards and upwards. And nice to have had a bit of a break. I wasn't here last week, of course. So I'm coming back to the chair very refreshed, very fulfilled. I've touched a lot of grass. I've crossed rivers, had some adventures. So happy. My bank account balance isn't as happy, but I am quite happy to be here.
No, well, hey, life's for living, you know. So you work to live, not live to work. So yes, that's no, you're doing the right thing there, spending your money on a nice trip in New Zealand, which we did mention to our listeners last week. But we won't go too much into the details of your trip because it'll just make us all very jealous. So let's just start off with your savings tips for this week.
Absolutely. Well, my savings tip is probably pretty on brand for me at this point. I am a scabby traveller, and that is to take any samples you can and take them by the fistful if you can get away with just grabbing samples left, right and centre. And things like aeroplane snacks is the one that popped into my mind for this week's savings tip, because what I did on my way to New Zealand is I got given on my flight, I got given some bread and a little jar of jam. And of course it comes with a side, you know, a couple of sachets of salt, a sachet of sugar, a little thing of soy milk that you can put in, like, because I don't drink regular milk, so I get the soy milk, put it in my coffee. All of those little things, they're pre-packaged. And I just put them straight into my carry-on luggage, and I don't actually eat them on the plane, because when you get off on the other side of an airplane and you're in a new country, you're only there for a few days. You don't want to be going to the supermarket and buying a whole thing of some sort of spread to put on your toast in the morning. You want to just grab your bread, grab your necessities, and kind of have those little small sample things ready to go. Also, little things like my perfume that I take on my travels at the moment is a sample pot that was given to me in some kind of gift basket thing at some point. So I just take my little mini perfume with me. I take lots of little towelettes. You know how people randomly sometimes hand you towelettes that are single wrapped, single use kind of wet wipes. I put them in my travel bag and I take them when I go overseas, rather than having to buy a whole pack of hand wipes or even like paper towel and stuff. If you spill something on you, you need those sort of things. So yeah, my savings tip is to be scabby and make use of samples. And I guess my only asterisk on that is to make sure if you are taking food items into countries like Australia and New Zealand and the likes, that you do declare them when you go through the border, because you don't want to be taking anything that can hurt the ecosystem over there. But yeah, I definitely carried my muesli bar and my salt and my sugar and my little jam packet and a few wet wipes off my Qantas flight, and had a great time, made good use of them and didn't have to buy a whole packet of jam.
Nice one. Yeah, good savings tip. You know, another one I like to do, it's just in hotels, particularly if you're staying in a really nice ritzy hotel that you wouldn't usually treat yourself to, such as, you know, when I stayed at the Four Seasons once. On the day we were checking out, the people sort of came into the room to sort of restock the little tiny soaps and shampoos and whatnot, and we just sort of joked as they left, like, oh, I should have just said, hey, you can just put that in our bags, thank you very much, because that's what we end up doing. Took them straight in our bags. I think you're allowed to do it. I think it's a given. Everyone assumes that you can take the soaps and shampoos. And
I think they're just rubbish otherwise. The other thing I've done is like when I've gone into, like last year when I was traveling, I was in Iceland and Budapest, and these kind of spa places that you go to a few different spas and hot springs and whatnot, is I've refilled my travel shampoo containers out of the, you know, big, massive bulk pumps that they leave in showers in those sort of places before. I don't know how ethical that is, but, you know, I'm not buying shampoo while I'm overseas. That's silly. So
fair play. Yeah, there you go. No, I love it. Love it. It's it might sound stingy as hell, but it's, Hey, it's the way to go. Particularly, I don't think we can blame you too much in these troubling times. But yes, speaking of the current times at the moment, obviously a lot of people that aren't lucky enough or were pressy enough to buy a EV vehicle before all this petrol price crisis struck with this war in Iran. But I dare say a lot of people listening are hoping for some petrol price, some petrol savings tips. So I've got some here prepared. I've just got a few little ones here that you can, when you're trying to save money on fuel at the moment. Every little bit counts, really. It might not sound like a lot of these things, but you might as well make some savings while you can. So the main one is, actually, I'm trying to think, is this still relevant this time? The timing the cycle thing, but we're not in a cycle at the moment, really. It's kind of just going up and up and up. So I guess maybe it's one of those things is like filling up before prices get too high. One way you can actually do that, and you can sort of give you a bit more certainty. We talk often on this podcast about, locking in things like fixed rates before rates start to go up. You can actually do that sort of thing with petrol prices. It looks like petrol prices are going to keep going up every day. But you can actually lock in the current price, even if it seems quite high now. It might actually be cheaper than it will be in a week's time. But you can lock in the price using the 7-Eleven app. A lot of people already know about this one. Essentially, you can use download the 7-Eleven app and lock in that petrol price that you like with a certain retailer for up to 7 days. And as I said, this is particularly useful in a rising market, and it can save you up to 25 cents per litre because they actually have a cap on the amount you can save with that at 25 cents per litre. So that can be a really decent saving for you. So I don't think there's any cost in doing so. You can actually sign up for the app and lock in today's price right now, which might look pretty high. I mean, I was looking around today and everything's $2.50 a litre at the least, at the lowest. But who knows? It could be $3 a litre in a week's time. I'm not sure what happens if you go in there and you've locked in a price that's, say, 50 cents a litre cheaper than the current price, whether you still get that 25 cents a litre discount. I'd assume so, hopefully. So, that could be one worth looking into doing. Say across the Fuel Watch apps, I use Motormouth. They can really help you find the cheapest fuel in the area. Just to demonstrate, if I look at it right now from my current location on the Gold Coast, I can see there's a 20 cent per litre difference between the most expensive and the least expensive unleaded 91 petrol for sale in my area. So that can make a big dent in terms of your savings there. When filling up for the best price. Also, if you haven't already, a lot of petrol retailers have an app. So if you haven't already got them, download them. And you might notice some of them, such as Ampol, actually offer these like welcome offers to new users of their app. So for example, the Ampol app offers a 6 cent per litre discount to new Fuel Pay users. Now, Fuel Pay is the one where you pay for the fuel at the pump rather than going inside to the shop. If you haven't tried that already, give that one a shot because it could save you 6 cents per litre. And then also make the most of the rewards. So most petrol price retailers are partnered with a rewards program, whether that's Flybys that's with Shell, Ampols with Everyday Rewards, the Woolies Everyday Rewards, 7-Elevens with Virgin Velocity, and BP's with Qantas Rewards. So given the cost of petrol, there are some serious points to be earned from filling up. So ensure you're scanning these in each time. And while these rewards points aren't typically worth that much, you might as well earn something for spending that you're doing anyway. And they can get you closer to having enough points for $10 off your shop, such as with Flybys or Woolies Everyday Rewards, or even affording a plane ticket if it's Velocity or Qantas points you're earning from 7-Eleven or BP. So those are just a few fuel savings tips in this current climate, Brooke.
Yeah, we absolutely, and we need them. Like, oh my goodness, they're just, as you say, they're going up and up every single day. And there was a stretch of road I was driving along the other day, and the difference between the cheapest and the most expensive fuel on this stretch of road with quite a few service stations, it was obviously some kind of intercity transport route, was like 20 cents a litre, which is just ridiculous. If you've got a 70-litre tank, there's so much money to be saved based on just choosing the cheapest fuel around you. And it's probably a good tip too to also, if you're buying fuel and thinking about rewards points at the same time, to check the different apps. So like your Woolies reward apps, your Flybuys apps can sometimes have extra, boostable rewards that you might get offered, 5 times the points to fill up today if you go into the app and boost that offer. So yeah, that might be worth considering too if you're worried at the Bowser. I guess that brings us straight into the news, because it's somewhat on topic that we have just had in the last couple of hours before recording. The latest CPI data has come in. Story number 1, inflation has fallen slightly on a seasonally adjusted basis in February. It's down to 3.7% on an annual basis, and that was down from 3.8% in January. Trimmed mean, however, that stayed flat. That's 3.3% on an annual basis. And of course, that's still higher than the RBA's target of 2 to 3%. Contributing the largest increase to inflation were housing costs, and that's been the case for a long time now. And it's largely due to the cost of electricity. Electricity actually does get lumped into that housing costs category, and it is obviously up higher compared to this time last year, when we had lots of state and federal government incentives or just credits on your electricity. They were still in play this time last year. So, of course, when we look at what's coming out of household budgets in terms of electricity spending, it's actually a lot more this time than it was this time last year. So housing costs up 7.2% year on year. Food and non-alcoholic drinks are up 3.1% year on year. And recreation and culture costs are up 4.1%. So they're the big drivers of inflation this last month. And of course, the inflation figures there, that covers the time before war broke out in Iran. So it's not including the higher petrol costs that we heard the RBA talk about a lot last week when they hiked the interest rates. Also on data drops, we saw unemployment come out in the last week. The unemployment rate actually rose in February to 4.3%, which could suggest that the strength of the labour market is starting to ease and could kind of reduce concerns of the tightness that has been adding to inflation in recent times. So that probably got a few hopes up around the place. But I mean, I've been seeing a lot of talk about stagnation, which is when the inflation is rising, but it's not being driven by consumer spending, that kind of supply and demand dynamic. It's actually being driven by a major economic shock like oil crises. Have you heard anything about this, Dom? What's your take on potential stagflation in the Australian economy?
Yeah, well, the thing with stagflation is often you see unemployment rates pretty high while inflation is also high. But the difference this time around is unemployment is still really low, even though it did pick up to 4.3%. A lot of the reason for the pickup wasn't really, it was kind of to do with changes in the participation rate. I think, maybe more people who decided, no, I'm out of the jobs market now, I'm fine. With the higher cost of living, suddenly being like, you know what, actually, I'm going to look for a job now. So the participation rate increased. So the more people in the market looking for work, and so the unemployment rate went up as a consequence. But in terms of the actual jobs numbers, I think they were still relatively strong. I think there was an increase in part-time jobs on the market. So more people in part-time jobs. There might have been a slight reduction in full-time jobs. So it was a bit of a mixed bag result. But yeah, I think I've sort of compared to the situation from the 70s, which obviously neither of us lived through that. We are a bit too young for that. But, just, looking through history and reading articles on it, it does sound like history repeating itself a little bit with the oil crisis and inflation going through the roof, and even just sort of politically as well, the sentiments seem to match up with a lot of what was going on back then. There's a real chance we could go through a recession. In Australia, as we talked to Shane Oliver about last week, particularly if this Iran war lasts a lot longer than expected and oil prices do go, $4 a litre, we could have some serious ramifications. And maybe that is when we start to see unemployment pick up. We are still hearing, you see in the news big headlines about major firms like big banks or even, Atlassian laying off, thousands of workers. we're just waiting for the unemployment rate to reflect that, but just not really seeing that at the moment. I think it's maybe a lot of people, say there's like older people who are in the workforce and they get made redundant. They just decide, you know what, I'm all set up anyway. I've paid off my mortgage. I've got a healthy super balance. I'll just retire. They're not considered unemployed until they suddenly go, you know what, actually, I'm pretty worried about the cost of things. I think I do still need a job. And then they re-enter the job market. Then you see the unemployment rate pick up as a result of that. But I think this just speaking on this, a lot of inflation data has come out. The market actually seems to like it a bit. I think it's a bit softer than they'd expected, but not that much. I mean, really, it's slightly reduced the chances of there being a rate hike in May. But it's gone from being 54% chance to 51%. So very marginal reduction in expectations following this inflation data release. But the share markets, looking at the ASX 200 since it's open today, it's up 2%. But I think by and large, that's on the sort of the hopeful expectations that the war might be over sooner than we think because of Trump looking to introduce new measures to try and sort it out quicker, and already being in talks with Iran's current leadership on what they can do. So I think that's why the market's picked up a bit, but a small aspect of that pickup in the share market is the reduced expectations of there being a rate hike in May, which would be great news for borrowers in this country to not be hit with the double whammy or triple whammy of interest rate rises, 2 interest rate rises and fuel price rises. So yeah, well, I mean, we've already had, it'd be a quadruple whammy, right? If we have 3 rate rises and fuel prices. So we're certainly going through a lot at the moment. But that sort of segues quite well into this next story, which, given everything we've just spoken about, it shouldn't be too much of a surprise to people. But this actually did surprise me, given it, Australia's gone through some pretty tough periods in the past. I mean, you think about more recently COVID, how much of a shocker that was. But consumer confidence, this is the story, has fallen to the lowest point since records began in 1973. So yeah, that's right, lower than it was in COVID. And this comes from the ANZ Roy Morgan polling, which they do every week. They've come out with a report saying the impacts of the Middle East conflict on oil prices and the economic outlook are likely behind the drop, along with the RBA's decision last week to increase the cash rate to 4.1%. And they also add that with very large increases in petrol prices through March, inflation expectations rose to an all-time high last week. Household confidence in their current and future finances weakened sharply, as did the time to buy a major household item subindex, which is at its lowest since late March 2020 when the pandemic lockdowns were announced. And just this last point here, concerns around upside inflation risk and urgency to keep inflation expectations anchored are likely to support a final 25 basis point rate hike by the RBA in May, taking the cash rate to 4.35%. So yeah, that is what ANZ is still expecting, that another rate hike will happen in May. But this report came out before this latest lot of inflation data, but I still doubt that this most recent data that's come out, which was largely expected. I saw it exactly match what CommBank had said would happen, that the headline rate would remain at 3.7% and the trimmed mean would be 3.3. I don't think it's going to change expectations from these economists at the big banks too much that there will be another hike in May. But what did you think, Brooke, about consumer confidence hitting an all-time low since records began in 1973?
Yeah, far out. That's depressing, isn't it? Like, my goodness. So what struck me from this report from Roy Morgan was that only 18% of respondents expected their family will be better off financially this time next year. And that's a record low for that question, responses to that question. And nearly half, 49%, expect their family to be worse off this time next year, which is a record high for responses to that question. So really feel for, we're all consumers and we're all feeling the pinch. Maybe our savings tips this week reflect that, just how much of the pinch we are feeling. But yeah, it's scary times, and it's particularly scary not necessarily seeing an out with petrol prices still rising, the impacts of that still flowing through the economy, still rate hikes on the cards. It's just a rough time, and yeah, we'll be here giving people all the latest and savings tips through it. But yeah, it's just depressing. Ultimately, at this point, is the only answer that I have, unfortunately, Dom. And I guess we may as well move on to the next news story on that note, which is a new report from APRA warning that insurance costs could undermine the entire financial system. So,
gee, I was hoping for a brighter news story to finish, but no. Okay.
No, wouldn't that be lovely? and we all get new cars, as Oprah said. So APRA has warned that climate-driven pressures on insurance premiums could see 1 in 4 Australian homes without adequate insurance by 2050. So the report posed 2 climate-related scenarios over the next 25 years, and under both, insurance premiums saw upwards pressure, and under both, that upwards pressure posed risks to the financial system. So it largely found that there will likely, or there could be, an increase in properties that are uninsured or underinsured. And then as climate change does impact Australian households more and more, financial losses may not be covered as much as they are today. And that could heighten credit risks for banks as well. I mean, it obviously would have a huge impact on households. Anyone who has ever lived in a bushfire or a flood zone will know the stress and the pressure that even just having that as a potential impact can have, let alone, if you actually experience it. Like, I'm sure a lot of people who live in Lismore at the moment will know quite well just how much climate change can impact your livelihood and your home. And yeah, of course, talking about the banking system, mortgages are then linked to house values, and houses that are under or uninsured then the owners experience some kind of weather crisis event. That asset may not be worth as much. If the person then defaults on their mortgage, then it could impact the stability of the bank, and then the cycle just continues, Dom.
Yeah, insurance is just one of those really painful costs in life, because it's you pay for it just for that peace of mind, but you don't really, other than that, you're not really getting anything out of it until you actually are in a, have a personal tragedy where, your house burns down or whatever, and that's when you love it. But when you don't need it, you hate it. It's one of those tricky things. And I'm not too surprised that a lot of homes are underinsured. I have been thinking about our place lately and how I probably need to speak to our insurer, because we've spent a fair bit of money on some improvements to the house, adding a fence and some driveway gates, and we haven't told our insurer about that. And, I dare say, there's a chance that a car could be driving down the street and lose control and smash through our fence and our new electric driveway gates. And then because we haven't told our insurer about it, they might not be willing to pay for that to be fixed. So I think I'm technically underinsured at the moment. Also, sort of, when I tell my partner what I've put as a sum insured for, if the house does burn down, the amount that I've given the insurer it will cost to rebuild the house. She's like, it would not cost. It would cost way more than that. What are you putting that in for? So it sounds like we'd just be building a tiny little shack if the place burns down completely. But really, I was just trying to get my premiums down. But, I do use those building cost estimators. There's the little calculators online you can use. I encourage everyone to do them. Use them when you are, getting quotes for your insurance, to use those estimators and plug in all the details about your home and the materials and whatnot, whether it has sheds or a pool or whatever. And it should give you a good summation of how much it would realistically cost to rebuild your home based on current cost of labor and materials. So you might be surprised how low it comes in. That's what I was when I plugged it all in. I was like, really? It only cost that much? Okay. But perhaps the calculator was wrong. So try a few different calculators to make sure you're getting a good figure. That's another tough one. And often insurance as well often leads the way in terms of the CPI. It's always up there as one of the highest, fastest rising costs. Particularly life insurance as well. So, it's one of those things I hope people aren't. It wouldn't surprise me, given that the current pressures at the moment, that maybe insurance becomes a luxury, but I hope people aren't looking and going, look, I just can't afford insurance at the moment. It's a big risk switching it off, but can't do it. But then you're forced to have it if you have a home loan, if you've got a mortgage. your mortgage provider requires you to hold a home insurance policy. So yeah, you probably can't switch that one off. But yeah, maybe the contents insurance goes. So that's something to think about for people at the moment. Alrighty, time to talk to our first guest of this week's episode. Let's go. Okay, time for this week's Dollar Dialogue. And with petrol prices spiking just before Easter, we're going to talk a bit about why it now might be the perfect time to sell your SUV. While the fuel price fear is really high at the moment, families are actually still desperate, though, for holiday-ready SUVs while avoiding the gas guzzlers in a bid for fuel-efficient models. So joining us to discuss today is the Director of Buying at Carma, Pete Willis. G'day, Pete. Great to have you on the podcast.
Thank you very much. Great to be here.
Hey, Pete, and great timing to come on. I mean, not only do we have petrol prices at huge highs, people are really worried about that, but I've actually just come back from a 10-day road trip around New Zealand. So I'm so keen to talk about on-the-road holidays and the benefits of that, and also fuel costs, because that stung the pocket while I was away for sure. But before we jump right into that nitty-gritty, Pete, do you have a savings tip to share with us?
Yeah, look, and probably really timely on the back of you being sort of out and about and doing that. Planning your journey when you're driving, pretty much anywhere. If you're going away, planning your journey to try and make sure that you're not sitting in those bottlenecks of traffic can be one that can really help save fuel. So it's certainly a time that people are thinking about it, and it's at front of mind. So take that time just to plan your trip. If you're not sitting in bumper-to-bumper traffic, you can save a fair bit of fuel and obviously save yourself some money. There's a lot of options there.
Absolutely, Pete. I have noted, been keeping an eye on the sort of the fuel use gauge that's on my car, which I don't often look at, but now I'm really getting acquainted with it and seeing when I am slowing down in stop-start traffic, how it surges to over 13 litres per 100 kilometres. 30. And then when I'm actually flying along at full speed, it's usually kind of around the 10. It's a bit of a gas guzzler. It's an old car, but yeah, I'm definitely keeping an eye on that stuff too. And I do remember your last tip as well on the savings tip, which is also quite pertinent at the moment, which was to check your tire pressure. Make sure you got the right tire pressure, because otherwise you'll be burning through a lot of extra fuel. So that's certainly a good one worth reminding people of at the moment. But yeah, just getting into the nitty gritty of today's topic. You reckon now's a good time to sell an SUV ahead of the Easter break. Why is that? Yeah,
look, coming into Easter, we always see, people are planning the next sort of getaway. There's a few short weeks in there, and people are looking forward to sort of getting some time off after the summer and, that early phase of the year. You've got families that have been through that first term of school. There's lots of opportunity there for people to get out, and then people are starting to think about, okay, have I got the right car for myself? Is that the car that we want to go away? So that opportunity for those people that are looking for, that car that is holiday ready is the place. So the used cars are obviously cars that are there ready to go, so people can jump right into those and make a purchase and be on the road in the next few days. So great opportunity to do that. And the conversation here about fuel and fuel price is probably the catalyst for a lot of people thinking about, is there another option for the car that we've got?
Absolutely, yeah. I think Easter is going to sneak up on a lot of us. I kind of forgot it was a fortnight away now. So yeah, people will be booking in their last minute trips today with their caravan or camper trailer, and when I am not in a gas guzzling motorhome in New Zealand, my household has two cars. We've got a Ford Ranger and a small kind of European car that's quite good on petrol. Now, you mentioned that trading a large SUV style car for a tiny hatch to save on petrol can be a costly mistake. Why is that? Because I do notice in my household, I tend to use a lot less petrol than my partner, even if I do more driving.
Yeah, look, it's certainly a choice that people need to make. And if that's the direction that you need and you need to change cars, obviously that's the way you need to go. But thinking about what you need the car for, if you've got that car for the purpose of towing a caravan, for the big family, obviously that's the purpose that you have it for. And by going back to, that cheaper or more economical car, you potentially put yourself in the position where you might have to change, again, and all of the costs associated with that. Plus, you're selling a car, at the time when you go, what, potentially, there might be a few of those in the market at the time, and you're competing with multiple others. So thinking about that, the short-term fuel price. We're not sure. It might be months. It might be a year. But naturally, the fuel price does ebb and flow, and we've seen this a couple of times where it sort of spikes to. I remember the last time it spiked at $3, but it naturally does come down. And there's lots of commentary around things that could help bring that back down. But, a knee-jerk reaction, if it's the car that you definitely need, is probably something you need to think about and consider before making the switch to something just purely because it's smaller and economical.
Yeah, worth keeping in mind. But naturally at the moment with prices so high, there has been a bit of a surge in demand for hybrids at the moment. So I wonder, how can people leverage that surge in demand for hybrids and perhaps, that halve their fuel bills without losing space?
So hybrid's a great option. It's been around for a long time now, and there's many of the favourite SUVs across all the range that come in hybrid and EV for that matter. So obviously they're a great opportunity for people to save. You see fuel usage is 5 and 6 litres per 100. So, those conversations at 10s and 15s and above, it's naturally a nicer place to be. And the part that really sits well with people on hybrids, it's very similar. Using a hybrid car, you still fill up with fuel. That EV concern on range and things like that just disappears when you've got hybrid, but you do have the added advantage of the car being far more efficient and the benefits of that.
Absolutely. Yeah, I've rented a few Priuses in my time and I've noticed just how far you get on a single tank. I think last year I got from Alice Springs to Uluru and back on one tank in an older style Toyota Prius. So yeah, definitely my next car I'll probably consider a hybrid because they do make a huge difference. Now, Pete, you mentioned that people are looking for their big car ahead of the Easter holidays. If you're looking to sell your car, why do you lose leverage the moment that Easter is over?
So obviously buyers in the market, I spoke about that. The volumes of people looking to buy, is higher at this time of year, and we do see that spike, those interest levels. So when you've got more buyers in the market, naturally there's more competitive tension. That's what you want. You get to the other side of Easter, people start to batten down the hatches to the middle part of the year. Coming into the winter months, there's less enthusiasm for spending time in the great outdoors and those sorts of things. So you're naturally having less people in the market. Plus, you're coming up to the end of, the end of financial, where there's obviously pressure on, to move things. So naturally, there's less buyers in the market, more products around is naturally going to be the shift that you don't really want. So it's a great time for people to get in the market, sell that car in the last sort of pocket of the year where it's really enthusiastic, and then move on.
And Pete, that sounds like that's the natural seasonal swing we see at this time of year. But I wonder if this year it's different given the circumstances with petrol prices going through the roof. We've just had another RBA interest rate hike. Consumer confidence has just hit an all-time low. Do you think that's going to be a huge dampener on the car market at the moment? Car sales surely will be dropping off over the next few months, right?
It's quite interesting. As I said, we're seeing still very high interest rates and very high interest from people, and still very high sales across our entire platform and Carma. So the people are still in the market, and there's lots of I mentioned earlier, there's lots of people that'll buy. They're buying a car. They might have a $70,000 car, and they're just looking to come back into something that might be a little bit more cost effective. So they might be looking for something $40,000 or $50,000, and that's what we would call back trading. So that customer's sort of going, I might owe $20,000 or $30,000 on this car, and I just want to remove that cost from my life. So those people are still active in the market. So seeing that happen, no matter what happens in the market, people are always looking, to continue to either update or reposition themselves for whatever reason. So there's still a lot of activity regardless. People are always looking to buy a car. They might not have another car. They might have got rid of their car last year and sort of been without one. There's always that need for that extra car as well. So we see a lot of that. We are seeing a lot of people trade at the moment. And it's not necessarily back trading. So it's still people that are sort of shifting from, one particular car, might have been a sedan or a hatch into a medium or a large SUV. There's always those natural progressions as well. As your family gets bigger, there's not much you can do about it. Your son now 6 foot. He doesn't fit in the back of the car. You can't funneling them into the back of the Yaris. As much as the Yaris has been great and fuel economical, you're sort of looking at it going, I need to find something else that fits him. So those things still happen and people are still well in the market, and there's still plenty of buyer activity out there.
Yeah, fantastic. Well, that's great news for anyone out there with a car in their driveway that they might be thinking of offloading in the near future, particularly amid these high petrol prices. And yeah, anyone looking to get into the pre-owned car market. Thank you so much for coming on the Savings Tip Jar, Pete. It's been great to pick your brains on this topic.
Thanks very much for having me, guys.
Cheers, Pete. Appreciate insights. Thanks. Alrighty, time to talk about savings scribes. And this week we're talking to Bea Garcia, finance journalist for Savings.com.au, who's recently written a piece exploring all the different various green car loans that are available in Australia at the moment. Now, this might be of significant interest to people at the moment in this current climate with petrol prices going through the roof. They might be eyeing off some of those EVs and hybrid cars that can save them a whole lot on fuel, and probably looking at various finance options because these cars, particularly when brand new, are not that cheap. G'day, Bea. Great to have your company on another episode of the Savings Tip Jar.
Hey guys, great to be back.
Hey, Bea, really keen to talk to you about this one, especially we've got so many new green cars in quotation marks because green cars can vary depending on whether you're talking about hybrids, EVs. We've got so many new EVs on the road lately. I've noticed that BYD Shark around everywhere, the Ute. So getting loans for these sort of cars is probably imperative for a lot of people looking to pick them up. But before we jump in, do you have a savings tip for us?
Yeah, so my savings tip for this episode is to shop on a full stomach. Probably isn't the first time you've heard of that, but I find that, it's a very effective trick. I notice that if I shop whenever I'm hungry, I overspend on stuff I don't even need. But then I've eaten, I stick to my grocery list and end up spending less.
That is a definite rule in my household, actually. Like we've made it a point that we eat before we go to the supermarket. That's a really good savings tip.
Yeah, good tip, Bea. Yeah, whenever I shop at the supermarket when I'm hungry, I always somehow go home with one of those roast chooks. That they have. The smell is just so enticing, and you just go, just grab one. It's quick and easy dinner. So that's certainly a good tip. Get onto the topic here. Green car loans. What is the main difference between a green car loan and a regular car loan? And can you actually save money with a green car loan?
So this is probably the first thing people want to know. So for green car loans, they're basically car loans designed for eco-friendly rides. They can be like electric vehicles, hybrids, or other low-emission cars. They usually come with perks such as lower interest rates, fewer fees, or better terms compared to regular car loans. The first thing people probably want to know is it cheaper than regular car loans? So kind of, but not always in the way that you'd expect. A lot of banks in Australia are starting to offer incentives if you're buying what they classify as, a green car. As I mentioned, that could mean lower interest rate, fewer fees, or small perks like cashbacks. For example, some lenders shave off around 1% from the interest rate, while others might waive things like $150 establishment fee, or maybe give you a few $100 back after the loan is approved. Now, on paper, that does make sense. These loans are cheaper than standard car loans. But the key thing is that the discount usually isn't massive. It's helpful, but it's not life-changing on its own. Where it gets more interesting, especially now, with fuel prices being unpredictable, is when you look at the total cost of owning the car. Because if you're paying a slightly cheaper loan with a car that uses less fuel, or maybe no fuel at all, those savings start to stack up over time.
Yeah, absolutely. And I guess it's in a lot of banks' best interests these days to offer incentives for people buying lower emission cars or putting solar panels on their house. It's something we've seen a lot in recent years. And I guess it stacks up for them when they're tallying up their financed emissions through the year. Getting people on with more eco-friendly assets makes sense for them because they can say that they've got lower emissions in their finance book than other banks. So yeah, that makes sense in that way. But I guess what comes to mind here, Bea, is these green cars are often more expensive. You often have to buy a newer car in order to qualify for a green car loan, as opposed to, an older car that might be higher on emissions. Can the savings from a green car loan actually outweigh the cost of buying a more expensive green car?
I guess this is where things get a bit complicated. Like you've pointed out, Brooke, cars that qualify for these green loans are either brand new or maybe fairly recent models. Naturally, newer cars cost more. So even if you're getting a better interest rate, you're often borrowing a bigger amount to begin with. So upfront, you're still spending more money. That's just the reality. And then you also have to watch out for stuff like, the proposed new road user tax for EV cars. Right now, if you're driving a petrol or diesel car in Australia, every time you fill up, you're handing over just over 50 cents a liter in fuel excise. But drivers of EV vehicles essentially pay nothing. And if you bring in the fuel crisis angle, this is where the conversation shifts a bit. If you're driving a traditional petrol car right now, you're kind of exposed to whatever happens with fuel prices. If it spikes, your weekly budget takes a hit immediately. But on the other hand, if you're driving a hybrid or an electric vehicle, you're at least partially protected from that. Hybrids use less fuel and EVs don't use fuel at all. So over time, especially if fuel prices stay high, those ongoing savings can start to maybe balance out the higher upfront costs. But that said, it's not really automatic. If you don't drive that much or maybe fuel prices stabilize in the future, it might take a long time to actually break even. So it really depends on your lifestyle. Things like how often you drive, how far, and how long you plan to keep your car.
Yeah, absolutely. Geez, but that's that proposal. I don't know if it's a formal proposal or just a rumor that the government is considering a tax on EVs. Surely EV drivers will be absolutely seething about something like that. They've probably saved an absolute bucket ton over the last few years, not getting hit with that fuel excise tax. Obviously, not having to pay for fuel, but that excise, which is 50 cents a litre. Imagine you're getting a 50 cents per litre discount on fuel. Like you're laughing all the way to the bank, particularly at the moment. EV drivers would hate to be hit with an equivalent tax. But, it's been talked about generally just there being maybe just a road user charge where, the more times you use the road, the more times you're driving, essentially, the higher you pay. But then also, is that a bit unfair because the people that tend to be doing the most driving, that live the furthest out from the city, will tend to be lower income households that can't afford to live close to the city. So it's one of those tricky ones at the moment. We'll see what comes out. I think they'll be announced in the budget there. But just the last one from me, Bea. Do green car loans make switching during a fuel crisis more financially realistic?
Yeah, so for me, they help, but they don't completely solve the affordability issue. Like I've mentioned, most green car loans are tied to newer vehicles. This means higher upfront costs and larger loan amounts. So even with a discounted rate, you're still committing to a significant financial decision. What green loans do is lower the barrier slightly. A reduced interest rate or added perks can make repayments maybe a bit more manageable for you compared to a standard loan. And in the context of a fuel crisis, that small reduction in loan costs can make a bigger psychological and financial difference. People are already feeling the strain from fuel expenses. So the idea of locking in lower running costs while also getting a slightly better deal can make the switch feel more justified. But yeah, it's important to be realistic. The loan itself isn't what makes the switch affordable. It just makes it easier to justify if you're already considering buying a new car. So in a way, green car loans really aren't the main driver of change. They're more of just a nudge. They support the decision, especially during a fuel crisis, but they don't replace the need to carefully consider your budget and long-term costs.
Absolutely, yeah. I think car loans are one of those segments of the financial market that the advertised interest rate isn't necessarily the interest rate that you're going to get. They take into account things like your age, your credit score to a higher degree than home loans typically do, the car you're buying, how much you're planning to use it. And potentially that's because, I would assume that's because of the fact that the loans are secured against an asset that is depreciating. So buying a newer car typically gives you a lower interest rate anyway, because the bank, if something does go wrong, can reclaim an asset that is worth more than a used car might be. But yeah, we've seen so many banks come out offering green home loans. I mean, many of the big four do. Those kind of climate-focused banks like Bank Australia, they've got green car loans on the books. So yeah, it's definitely maybe something worth considering if you're thinking about buying a newer car and you think it might be a low emissions car or an EV or a hybrid. Potentially check out green car loans. They might tip the balance for you. Thanks so much for coming on the Savings Tip Jar, Bea. It's been great to pick your brains on this one.
Thanks, Tom and Brooke.
Thanks, Bea. Cheers. Yes, that was Bea Garcia, one of the savings scribes here at Savings.com.au. And that brings us to the end of another episode of the Savings Tip Jar podcast. Thanks thanks very much for listening. Thanks very much to our guests, Bea Garcia and Pete Willis. Thanks, of course, to our sponsors, Savings.com.au and Your Mortgage. And Brooke, for the last time, thank you very much for your time on this podcast and all of your times on the podcast over the last few years. We've really appreciated everything you've had to say. You've brought a lot to this podcast, many savings tips, many great insights. I've got one last question for you though, is, all your time working here at Savings and being on the podcast, what are some of the top things that you've learned in that time talking finance?
Good. Well, thank you, Dom. That was some really nice words there. Really appreciate that. They're lovely. Some of the things I've learned on the podcast, maybe just at my time at Savings, just more generally, is that this is all it's ebbs and flows, peaks and swings and roundabouts and all sorts of things. What might be a tough time right now, as we were talking about in the news segment, it's all doom and gloom and negativity. The next high is always coming. The next market peak is always coming. The next, perfect property purchase is always coming. It does always work out economically, even if it feels really tough at a particular time. So maybe that's my final takeaway is just hang in there. The bad times never last forever. Don't lose hope. Hopefully that's not too, I don't know, too bright and sunshiny, but that's probably what I'd like to.
Need more optimism. There's too much pessimism in the world, and I try to take a glass half full approach to everything, and I think it sounds like you do too. We need more people thinking the best, thinking that the better times are ahead, because it's kind of a self-fulfilling prophecy if you're just expecting doom and gloom around the corner all the time. So, I think that's kind of what you're getting at there. Like I said, we've loved your time here on the Savings Tip Jar podcast. You've been a brilliant addition, and we're going to miss you very much. You're leaving a big hole. But anyone that wants to get in touch with us, give us some feedback, hit us up via the social medias, leave us a review, and send us an email, inquiries@savings.com.au. You can send your farewell messages to Brooke there. I'm sure she'll appreciate reading those.
Absolutely.
You can just comment on the podcast as well, say thanks to Brooke for everything she's done. Farewell, Brooke, and have a nice life. But no, just take
Thanks, Dom. Appreciate it.
Cool. And all you listeners, catch us next week for more episodes of the Savings Tip Jar podcast. Thanks very much for listening. Catch you then. See ya.
Bye.